Things get really exciting in this lesson. We look at the individual building blocks again and try to combine them all and transfer them to the live example in the market. So here's an overview of our building blocks. First, we look at the market phases we are in. We need to determine the market phase in a meaningful way so that we can select the right setup for the market phase. In the second step, we look at the structure and determine it so that we know exactly where we are in the market. In the third step, we look at which supply and demand zones come into question for us. Where could we recognize that institutional money has entered and use these zones accordingly? The fourth step is liquidity. We must always pay attention to whether someone has already entered before us, where the SLs of the retailers are, and whether they have been hunted already. The fifth step is the price action. We look at what the market is telling us with the price action, how it reacts in the important zones, and thus we can find the best entry for us. And the last step is the indicators. Are there indicators that support our idea or with which we can support our setup even more? I've roughly introduced you to these 6 building blocks in the previous videos, and we will dive deeper into them in the future. But now let's take a look at the real chart. Here we have a real chart example in the DAX in the hourly chart. Let's take a look at the steps again. Phase 1. We see we are in an uptrend market. Phase 2. The structure corresponds to the market phase, so we are clearly bullish and we are only interested in longs. Now we take the next step. We look into the supply and demand zones. We see we had a long push here and we consolidated here a bit. And we marked our demand zone here. From this demand zone, we clearly see a push to the top already, but we didn't break this high. We only went above it with a candle wick, but we didn't see a full body close of a candle over there. So it's not a break for us, basically. From this level, we saw the chart dive into our H1 demand zone again. And here we take already a look into the next step, the liquidity. We saw a liquidity build up before here. Sure, the market didn't take all of this liquidity, but we took some major levels of liquidity. Now let's take a look to the price action. We took the liquidity on these 2 levels here, and after we took it, we saw already a bullish close of the candle. This shows clearly bullish intent of the market here. Our next step then would be, we mark our next demand zone on the 15-minute chart, this one is here, and we wait for the market to come back into this area and we search for a long trade. Here we could have ended a long trade. For example, this one could have been our trade. We can also take a look at this last step, the indicators. Surely, we don't always use them, but here for example, we saw the downshift into the demand zone and we saw the price react on the 50 EMA. Sure, you only know that the price reacted at the 50 EMA after this candle is already closed. That's why we could end this trade here and use it as a bullish validation that the market rejected from this level, basically. All these points here give us the opportunity to get into the market and place a trade. This is the type of trade we are after and we want to replicate it again and again.